All right, everyone, let's review this Robinhood portfolio for the week. Seems like I'm trying to do videos every Friday or so, but excuse me, right now the portfolio is down $55.56, and in the after hours I am down $9.96. So, guys, it's going to be an interesting time to talk about what my portfolio has been doing. I don't think I've been talking about what my portfolio has been doing throughout the year, and so we're just going to quickly go over that right quick. Says for the past year, I am up 4%, almost closer to 5%, but $1,071. So that's pretty good to see here. We can see that there's a tremendous amount of volatility right here. This is when the markets were selling off, and especially that December correction, which my portfolio it went from $23,000 all the way down to about $21,000. So we can see a 6% drop, and then the portfolio kind of recovered from there. I'm going to talk about my portfolio, guys. It's been slight changes in the portfolio. Actually, I think it may have been major changes in the portfolio, but we're just going to quickly go over that right now. So let's get to it. Let's take a look at Apple, 192.62. Not a good day for Apple. I think today the big news was that the chip makers did not do so well. So in general, the tech market did not do well, and Apple is down for today 0.73%. Right now, my shares are 10. Average cost 179.76. Total return, I'm still up 7% on Apple, so that's really good to see there. I really like Apple a lot because of it's just everybody just uses Apple. Everybody has a cell phone from their products. They sell computers. They just do a lot of things. Giant market cap, blue chip staple in the tech, especially in that tech sector. Good services stocks, however you want to look at it. They just do so many things, and they're very, very diversified. So I like that, and I like to probably buy some more shares if it ever gets back down to that 140 mark. I thought that was absolutely ridiculous that I missed that buying point, but one was my position 179.76. Apple's a good company. I like them a lot. So let's take a look at 3M here, 166.99, down $2.16 today. Nothing was sold. You guys can see that my average cost still remains the same, 165. Total return slightly up 0.89%, $14. 3M massive, massive correction after those bad earnings reports, but I think they're a pretty good buy or so if you could have got them at that $160 mark. I bought them at 165, but I'm still sitting on a 5% dividend yield. Actually, a 3.5% dividend yield for 3M. It's a dividend king, dividend aristocrat. It's just a pretty good, solid dividend stock. I know that a lot of people are just panicking because their earnings reports have not been doing some good. But the trade war has also affected the stock. But they have tons and tons of products. They make tons of products on the market. Everybody uses 3M. They make tapes, folders, all kinds of stuff, guys. So they actually have a healthcare division. I don't think their healthcare division is doing so well though. But 3M is a diversified industrial, so it's a good company to have in your portfolio if you could just catch them on the dip. And I think that they are a pretty good buying point right now. But like I said before, you have to do your due diligence with this company. I'm not a financial advisor, and buy at your own risk. So let's take a look at Johnson Johnson, 140.09. My position, 139.27. I'm up $8. Pretty good dividend stock. I like them. This is another one of those high-paying dividend stocks. Giant healthcare provider. I've said in previous videos before that Johnson & Johnson, the Amazon of healthcare, quote unquote, but giant company that faces a lot of lawsuits. I think that's what's holding the stock back from truly breaking out here. We can see that the stock got all the way up to about 147 or so before that massive correction hit. They were actually doing not too bad during that October correction when all the way to December 24th. They kind of just held their own there, and then a massive dip right here. So we're seeing a lot of volatility with these dips. And there's a lot of things with Johnson & Johnson that's happening right now. The Tide Power case, you guys know about that. And investors don't like lawsuits, so I like this stock. I'm not selling this stock. I would love to buy this stock around that $120, $120 mark, but 139. I still think that average cost is a bit high, and I'm just gonna hold it out here. Took a look at Pfizer, 42.76. This is a very, very defensive stock. Pfizer has been doing very, very well for my portfolio. Past year has been actually been doing pretty good, up 18% for this past year. And I've been holding Pfizer for a while, so definitely good defensive play. Biopharmaceutical healthcare has been up and down recently, but Pfizer just continues to rock it. I'm crushing it with this company right now. 7%, 143 total return, $143. So my average cost is 39 bucks. I said that I wanted to buy Pfizer when it got down to that $39 mark. Wish I would have bought lower than that. I think it dipped all the way down to about 48 bucks. I mean, it's not 48 bucks, excuse me. It dipped all the way down to 38 bucks. Let's take a look here. Yep, that's where it dipped down at, and that's where you probably would want to buy. Yeah, it's down 5%, so that's that. When I see that, it's time to buy, and I definitely like Pfizer a lot. I did get paid a dividend from them. Just scroll down here. So I did get a dividend paid from them. You guys can see $18 dividend, which is pretty good. Like this, I like this company, blue chip stock. Giant biopharmaceutical healthcare, one of the better ones on the market. I know a lot of people like AbbVie, but I just think that Pfizer is safer. That's the reason why I bought them. And I actually have a little bit of AbbVie in my retirement account, but for the Robinhood portfolio, it's Pfizer all the way. That's why I have so much equity into this company, because I just believe in the stock and I just like its defensive utility. So let's take a look at Altria, $50.61. Altria is probably my biggest loser. I may have bought this a little bit too high. Average cost $53.53. Portfolio diversity is just around 10% or so. But I am down 145 with this company. I've been down quite a while with Altria. I definitely still believe in them. I like the company. Their brand, as far as marketing, cigarette sales have not been doing very good. I've been mentioning that in prior videos that their cigarette sales have not been doing very good, and cannabis seems to be taking a nosedive as well. So not very good for Altria. I think Altria is, if it ever gets back down to that $145 mark, I think there'll be a pretty good buy there. But for the past year, it's down 10%. So where do you want to buy this company at? And when you buy a company like this, you will get that high dividend yield. You get exposed to that high dividend yield. But Altria, my biggest loser thus far, but I am still going to get paid dividends, as you guys can see here. For the number of shares that I have, I still have 50 shares. Amount per share, 80 cents. So that's total $40, which is actually pretty good for a company like Altria that's paying fat dividends like this. $40 for doing absolutely nothing, which is just incredible to me. This is why I like this company. This is the reason why I continue to hold and I continue to do nothing, because I know that I'm going to get paid a fat dividend, and I know that Altria is going to figure it out. So let's continue into the portfolio here, and we're starting to get to our new stocks into the portfolio. We can see Waste Management, which had a very good day today, not surprisingly, 0.82% today on $114. My number of shares, I have 8 shares of Waste Management, and now is up $1.84. So this is a recent buy. As you guys can see, I recently bought this today, and I'm going to actually admit, guys, this is not a very good buy. It's at all-time highs, and this company just continues to go up and up and up. And you do not want to buy a company at all-time highs, but I've said it before in my stock notes in the previous video that I think it was the previous video that I did like this company a lot. I like its defensive utilities versus the bearish trends. I just like this. I don't really actually know what sector Waste Management is in. I think it's utilities. I want to say it's utilities, but they just do a lot of things. I do have the concerns about its recycling costs, or how the recycling costs, how that's going to affect the stock. But it's just a stock that I think every portfolio would enjoy. It's Waste Management, and I ended up selling AT&T, and which really hurt because I like AT&T. You guys know I love AT&T, but I ended up selling at AT&T at $32 or so, because I'm waiting. I've been doing a lot of swing trading with AT&T, and it got back up to 32, 34, which I usually sell at. And I just usually wait until it gets back down to that $29, $30 mark to buy back in. So you can definitely, I can definitely tell you guys for certainty that I'm going to be buying and watching AT&T closely now, because I ended up selling off at its high point. I believe that AT&T is going to face a resistance point around $33 or so, which it is, and that's the reason why I sold. But Waste Management, I just like the company. I just like how defensive it is, and we do need a company like this in the world because we need to just have that waste managed. So, waste management, interesting, very interesting buy here. This is something that I don't really follow as far as when I'm buying stocks. My codes to buying stocks is to buy at when a stock is being sold off. So waste management, interesting there. Let's continue in the portfolio. Amazon is now in the portfolio, so we are seeing quite a lot of changes with this portfolio. Amazon, and this is a stock that doesn't even pay dividends and is in the portfolio. Quite interesting to see there. Average cost $1,000, $866. Only one share of Amazon. Portfolio diversity 7%. Well, so why did I put Amazon in the portfolio? It doesn't pay any dividends. It has a high PE ratio. The reason why I put Amazon in the portfolio is because, well, why not? I guess why not put Amazon in the portfolio? It's a giant, e-commerce giant. Retail is looking good. The sales continue to fall in place. They are monopolizing everything, and to me, I just like the growth. I think that the portfolios at times my portfolio struggles with growth aspects. I don't have Visa anymore, and like the previous videos where I can just rely on Visa for my potential capital gains. But Amazon is going to take care of that because I love Amazon a lot. Actually, I might like them more than Costco. I really really like Costco, but the thing that stopped me from buying Amazon all this time is just the valuation. The valuation is just insane. It's crazy. It's almost $2,000. But I went on ahead, guys. I got into Amazon, and now Amazon is portfolio. So that is one weakness to the portfolio that is solved. It's capital gains, its growth aspects, problems are solved, and now I have a retail giant into the portfolio. Something that I thought that the portfolio really needed. The portfolio really needed a stock like an Amazon that I can just hold out for several years or so. And Amazon is a good company. Jeff Bezos is monopolizing everything, and you want to be along with the ride. If they're monopolizing everything and everybody's using it, so this stock does not pay a dividend, and this is the only stock in the portfolio that probably will not pay a dividend. So Amazon, very interesting to see that I've added Amazon to the portfolio. Vanguard Total Stock Market ETF 147.63. Let's hurry up and get finished with the video, guys. 50 shares, 121. Average cost 21%. I am rocking it with VTI. And the last stock in the portfolio, actually these are ETFs. VTI's ETF and PowerShares S&P 500 high dividend ETF, $41.92. A lot of people like this ETF a lot. Very popular amongst the YouTube trading community. Let's take a look at what I've been doing with this ETF. 100 shares, average cost $38.58, total return $333 for 8% gain, and I will be getting that monthly dividend. You guys know that this company pays monthly dividends. This is the last dividend that I got paid for, $15.11, and I will continue to receive that monthly dividend. So that's going to be it for the portfolio, guys. I'm just wrapping things up here. The loss of AT&T really does sting, but I kind of needed to add waste management to balance out the portfolio concerns. AT&T, the trend for AT&T is it's not really bullish. It's just a lot of day trading is being done in that stock, and it's hitting resistance points. So, I'm selling at the resistance points, and I'm buying the dips with AT&T, and it's probably going to see AT&T back in the video not too long. Probably like next week, I'll probably just buy AT&T, and it'll be back into the portfolio. But still, the portfolio is still killing it, guys. Amazon's in the portfolio now, so that gave me some really, really strong growth. Waste management's there to play defense, even though it's at all-time highs. And, as long as I hold, I'll be just fine. And I kind of took a hit with my dividends, but sometimes you have to avoid the dividend in order to lock profits. And that's what I did. I just ended up selling AT&T, for instance, and I gained $39 off that stock. Now, The problem is that I don't have the stock anymore, but I would have got a dividend of $25 versus the $39 that I sold for. So you have to ask yourself, well, which route do I want to take? Do I want to get $39 just by selling the company altogether, or just keep it for the dividend? And I ended up selling because I want that $39. So sometimes you have to avoid the dividend in order to get more money. But yeah, that's gonna do it, guys. 24,000, $29. I'm trying to think, is there anything else I need to add here? I'm down $55 for the day. I actually had stock notes that I was going to put into the video, but it was just me talking about how I'm going to buy Amazon, which I did, and now Amazon is back into the portfolio. That's going to do it, guys. That's going to wrap things up, and I'll see you guys next time.